All right. Hey, everybody. TJ here. And let's see. I'm going to make sure I got all this stuff working. I've got multiple places that I am live here and seeing all the questions too. So, one more place I just need to get this thing figured out so that I can see all the comments and the chat. And there we go. All set up. But yeah, Danielle, great having you back. It's good hearing you again. I'm sure you're thrilled about having closed today. Mirza, you guys hearing me all right? Hustle Bustle says that they can't hear me, so I want to make sure we're good. And we should be good in the Moxy room. Can we just double check that too? Okay, yeah, we're good. Nice to see that. All right. But yeah, you got what, three kids? My wife's sister just had a kid too, and they're at the stage where all they do is they kind of cry and then you feed them and they're okay. So that seems kind of easier. It's, I guess, when they start growing up a little bit, start talking back, that can get a little bit challenging, right? But yeah, you and Daryl work from home. That's great. One of the things I do too. And we've got the 2 cats, we got a dog, and then whenever there's a kid in the picture, it's going to be a full house too. So yeah, all right, looks like we're good to go. And then we are out on the social medias as well. We got YouTube, Facebook, and X. So good to see everybody out there. Okay, so yeah, today, wow, what a day, man. What has it been a month? I feel like everything has been slowing down because it's just there's so much happening and so much going on. And then the market definitely did not price in the tariffs. Okay, we knew they were coming. We knew they were coming for months. And then finally, the market started to move down. We bounced at a level. We had a potential double bottom. That thing broke basically on Liberation Day, if we want to call it that. And that's when the market continued going lower. I can show some charts that we can discuss about with that. But really, I was just on in the central room and the Moxy room, kind of going through the market anyway. So, let me know if anybody else on the interwebs, YouTube, Facebook, X, have any kind of questions like that in particular. But other than that, I do have my class coming up tomorrow. What a wonderful time to be teaching a class, right? So, I know it's always a little bit nerve-wracking when we get into a situation like this that, the market's coming down and you're probably thinking like, why would I go buy a class? Why am I learning how to do this? Well, we still have hundreds of people who are here every day in our rooms, in the Moxy room, in Danielle's room, in Allison's room, like in all the rooms. And whether you guys are day trading or doing futures or trading spreads, or if you're just sitting back eating popcorn, this is what we do. And whether we're trading every single day or almost every day, I mean, like I've had 3 day trades this week that have all worked out well. So I've taken 3 and all 3. So I'm 3 for 3 this week. And then we even took a swing trade yesterday on GDX because we wanted to short it. So we did GDXD. It's the leverage inverse ETF, which is also one of the classes that I'm going to be teaching. And it was starting to show me some things that was that you wouldn't normally see in GDX as far as the ETF itself. And so these are the kind of things that there's still opportunity in here. Just because the market's going straight down doesn't mean you can't do anything. In fact, if you want to be short, hey, today was probably a great day. You could be selling call credit spreads on the way down because, if we look at this, look at these internals. Okay, this is a very, very heavy day. So basically, short the bounces. Any kind of bounce you get, short it. And that seems to be what worked today as far as one of those strategies. So there's opportunity. And I just want you guys to know whether you guys are new or trying to get into the market. In fact, I have one guy that I'm working with. He's a younger guy. He's like, man, thanks for all the advice. I love what you're doing here and telling me, because he was actually asking about buying Palantir. I think it was last week or maybe the week before, because, Palantir's down. So he's like, great, buy the dip. And I told him, like, absolutely not. That is not the right decision for you because you are looking to invest. You are looking to put your money someplace and you want it to grow. This is not the time for that. This is a trader's market. And that is primarily what we are doing. Now, of course, some of us have longer term accounts. We can kind of look at things and say when it's better to be in the market long term versus short term. But for him, I said, this is not a good environment. And what I was trying to tell him is, like, it's a great time to learn. You can paper trade, you can day trade, you can do all these things. But this is the time where, like, stay in, like, stay around, listen to what other traders do. Because honestly, what I used to do back in the day before I had my indicator or anything else like this, I'd try and trade this and I didn't know what I was doing. And I would just be losing money. But now we're making money during something like this. And so that's really the key. Whether you decide to go to cash or if you want to trade through this, there's opportunity and you need to have enough education that you need to know which direction you want to go. Do you want to sit it out? You need to have enough education to know to sit it out. Do you want to trade it? Well, now you need to have enough education to know how to short it, how to catch the bounces, when to get out of those bounces, or how to day trade like what we've been doing. And that's everything that we've been working on over the last month since this market has changed course on us. So that is why we still like to sell these classes, put the education out here, because you guys still need to know these things if you're interested in being in the market. So again, that younger guy, friend of mine, who's been talking to me, I was like, man, yeah, this is the kind of stuff that you need to be able to learn, because this is not a bounce and a downtrend, or this is not a buy the dip situation. This is not a dip and an uptrend. This is a legit downtrend. And I think you guys been hearing me, probably 2.5 weeks ago, I started seeing, TikTokers and financial influencers and YouTubers. And I know I'm on YouTube too. It's like, we're all on YouTube, but a lot of them were out there like, and I know in the comments, you guys have been saying it too, because you've been like parroting it back to me saying, yeah, I've seen those people out there who are like, that this is how the millionaires get rich. This is how you're gonna make $1 million, is you're gonna buy the dip because that's what they do. That's true when it's in an uptrend, when we're in a bull market. But the problem is these people were not educated enough. They did not have enough experience to recognize the difference between buying the dip in an uptrend and when something has actually changed. I'm watching one of these YouTubers that I'm kind of keeping track to see, like, what is he saying in order to see if I'm right or wrong, and to make sure that I know what to push back on when people are giving the bad information out there. He was like, this is going to be the bounce of the year. This is going to be the biggest bounce of 2025. And I'm like, dude, you're so wrong about this. This is going to simply be a bounce and a downtrend because the market has completely changed. And I'm watching his videos and he's just kind of like not really talking about it, or he's trying to change some of his strategies. Maybe he made a few bucks off that thing if he's lucky to have gotten out early. But yeah, he kind of had to change his tune. This was not the bounce of the year. Absolutely not. And we knew that, and that's how we knew when to get out on the upstroke for this. Bill, yeah, let's see. For anyone who has questions as to whether the system works, oh, Bill, yeah, nice. You can confirm it does and is adaptable to anyone's style. Great work for day trading or swing trading. Love it, guys, right there, right from our subscribers. So sorry, I'm sure you can probably hear those pots and pans in the background. We're actually having some company over tonight. So I've been cleaning up the house in between watching the market, what's going on. And then after this, I'll have to go back and keep, it's my turn to vacuum and get the bathrooms. So, typical duties. But yeah, let me just show you real quick, because if we look at the market here, we took some long trades right here when the market started to hit its first 10% correction. And we knew, because of the Moxy indicator and because of the Moxy method, to get out up there. And then because of the way that I coach and everything else, I said, yeah, we should definitely expect to pull back from there. And that's what happened. So, and then even if you guys want to look at I think it was March 28th, I was putting out some videos, and then I also put out my weekly watch list video inside of Simpler on Monday. And I said, if this is a weak bounce, we're going to come up to here and we're going to roll over. If it's a stronger bounce, great. Like the market already priced this in, we're going to go higher. But if the market did not, or if Trump doubled down, or, this is bigger deal than we thought, the market is going to run exactly into here on the hourly chart. And that's what it did on Wednesday night, and then rolled over hard. Okay. So that was a absolutely confirmed move. And as of Friday, I had started to talk about that kind of stuff and say, here's our path. Here's the upside path. Here's the downside path. So yeah. And then if you guys want to be day trading, that's the whole point of what we do here, is that the method I teach is fractal. That's the best word to really describe it, is fractal. And what that means is it's the same principles, whether you're trading the 2-minute or the daily, because I use the same moving averages and I apply them in the same way. And it's all the same rules. You just have to figure out which time frame you're looking at, what kind of setup. Okay. So I think it was yesterday we took a trade on the 2-minute time frame. And it's the same setup that I can show you on an hourly or even a 15-minute time frame on Tesla or Palantir that are coming down right now. It was a bearish trade. So the Moxy principles, the Moxy rules, they work long or short. You just, it's regular upside down, and they work on all the time frames because it's all the same principles in all the same ways. Let's see, AFD, will I be teaching the SPX day trading system tomorrow, or is that reserved for the breakout sessions? Yes, those are reserved for the breakout sessions. I'm trying to think here we go. So the basic is you're going to get the Moxy indicator method class. That's going to be the OG, here's how you trade the Moxy indicator, everything related to Moxy, that kind of stuff. And then if you get the pro and or the elite, that's where you get these breakout sessions. And we're going to be doing the ETF breakout and the SPX 0DT day trading breakout. And those are going to be, the SPX one I think is Tuesday the 8th, and then the ETF one I think is Wednesday the 16th. Let me just double check that real quick before I put my foot in my mouth. Yes, it is Wednesday the 16th. So the 8th for SPX 0DT and the 16th for the ETF stuff. And so really, yeah, you guys are going to be getting 3 classes all in one. And if you guys already own the Moxy indicator, the team will make sure that you're not overpaying for something you don't need already. And if you're new to this, you get the Moxy indicator, you get the class, all that kind of stuff. It goes together. So yeah, it works out nicely. Okay. And then, yeah, so KS, you're having a question. Let me come over here because I see you're asking a day trading question. You're saying that you notice the Moxy signal has 3 arrows or 5 arrows. What does that mean? Unfortunately, that's just math. That's kind of how the indicator works on Thinkorswim, because I don't think it does that on, say, stock charts, and I don't think it does that on TradingView. But basically, it's just how this works. So when you look at the Moxy indicator, just assume it's one trigger. It's one arrow. It just is because of the way that the math is working out. And you can see like in here, multiple arrows there. So, and you can see up here that you see how they're just all multiple. So there's like 4 here, there's like 7 here, whatever. That's just how it works. But you'll notice that when they fire, they all fire at once. So it's really just on or off. So yeah, don't worry about the number of them. PY, any updates on the Moxy Trader glossary? Good question, because I actually brought that up. I wanted to show you, let's see, where is it? I brought it up here someplace. Here we go. So yeah, this is some fun stuff. Part of the stuff that you'll get is the Moxy indicator setup and the guidebook. This is something we've been working on over the last few years and just making sure everything's good. And then PY, no, there shouldn't be anything new as far as the update. The glossary. This is part of why I think a lot of people like the Moxy indicator and the methodology, is because I haven't changed it. Okay. I've added a couple features here and there because of day trading and because of like the 15-minute squeeze. We actually had some of you guys, we had subscribers and traders say, hey, can you do this thing? And can you make this for us? And I was like, actually, that's a great idea. So we incorporated that. So there are a couple of new bells and whistles, but the core Moxy principles have stayed the same. And that's what I think is really great, because when my dad and I were starting to learn how to trade, like, cause my dad was always an investor, but then he's like, well, what about day trading, or what about short-term trading the ES and futures and stuff like that? And the guy's first name was Mike. I'm not going to say his last name, but his trading methodology changed all the time. Like, every week or two, he had a new thing to his indicator. Okay, these 5 dots, when they line up and do something, you're supposed to do this. Okay. And then when this thing lines up, I'm going to add this feature and this does something. He kept changing it. I was like, dude, this is the hardest thing in the world, because you keep changing your indicator and your methodology. Which one are we supposed to believe, and which one do we go with? And it was very frustrating. I just remember telling my dad, because I was in high school at the time trying to figure this out. I said, Dad, how are we supposed to work with this? Like, of course he knows what he's doing because he's good at this. This is his thing. But for the rest of us, like, okay, we're supposed to get to use something. And by the time we kind of figured out, he changes it. And so that was the thing that really frustrated me. And so I actually pride myself that I've been using the same thing the same way for over a decade, and we can rely on that. That's really the core of it. Was we can trust it, we can rely on it. The same Moxy indicator and principles have been working for a long time in all the markets. I love it. But yeah, you come through here, you can see some of the stuff that we have taught and teach and all this kind of stuff. Make sure you set it up properly. So we have a step-by-step step-by-step instruction manual for making sure that you can install it properly. That's actually one of the things we've done, is we've made it easier to install over the course of time. And now they also auto populate. So anytime you change your time frame, it'll match to it. These are just some general principles for how to trade using trampoline moves or divergences. And then I think, yeah, at the bottom, yeah, here's the glossary. Start getting into the glossary stuff, general principles, all that kind of stuff. So yeah, still there. Things like this, just kind of showing you how it actually works out. And then all of these rules. In fact, I actually just got an email from, I assume a subscriber, because he said he bought the indicator. And I was like, man, you just reinvented the wheel, because he's like, hey, after subscribing to you for a long time and watching your videos and being in the class and all this kind of stuff, here are all the rules and basic principles that I came up with. And as I'm going through it, I'm like, this is amazing. Like, you're a really good student, because you have now taken everything that I talk about and you have translated it into your own booklet and your own instruction manual. But I was like, man, I already have all that. I hope you ever saw this, or maybe the fact that he writes it down, it sticks in his head a little bit better. But yeah, we already have all that information for you. And so we have a ready to go step-by-step instruction manual for you guys. And that's another thing that I offer that, I don't know if too many people outside of Simpler offer. We also have, let me show you the other one. This is the scanner guidebook. So the other kind of common question I get is, do you have a way to scan for stocks using the Moxy indicator? Absolutely. So this is it. This is where we use our scanner. This is for the 15-minute power dots and all that kind of stuff, showing you guys what it is, how to save it. Because here's a little tip. Did you guys know that in Thinkorswim, you can save a scan parameter as a watch list, as an active watch list? So anytime, like, oh, if I want to be scanning for the hourly Moxy price trigger, well, instead of just running a scan and look at the names and running a scan and looking at the names, you can actually have Thinkorswim make that scan an active watch list. And now anytime a ticker out there fulfills that query, then it'll just populate in that watch list. And for me, halfway through the day or at the end of the day, I can scroll through there and see what's triggered. And that's a really great thing to do too. It makes it much faster to actually go through everything. But yeah, this is what we do. You can see here how you open up the scanner, some of the principles behind it, again, step by step, making sure that you guys know how to do this. We've got lots of customer support, and we make sure we take care of you guys. So you never need to feel like you're going to be hung out to dry or anything else like that, or your questions aren't answered. We got lots of help for you. Okay. So let's see. Guillermo, yes, the Moxy indicator is available in TradingView. It's also available in stockcharts.com. Yo, Bill, yeah, the checklist on when to enter a trade. Let me pull that one up, because that one is also interesting. Let me make sure I need to save this better. Here it is. So like this flow chart. This is another thing that you guys get. And, I put this out all the time. So this isn't anything that's like, oh, you have to pay to get it. Now, this is something that I really like to just kind of put out there, because, man, the reason I came up with this is because I used to be really good at buying bounces in a downtrend. So if you kind of look here, let's say the market's, it's generally coming down, right? So the market comes down, and then at some point you're going to get a bounce because it gets oversold. And I was really good at buying it right there, right at the turn. And then I'd be making some money, and then it would come up here and then it would roll over and go even lower. And like, what happened? How am I getting this wrong? What's going on? And I didn't really know about time frames, or which time frame is important, or that you can have a bounce in an overall downtrend. So it looked like you were in an uptrend on one time frame, but really you're in an overall downtrend. And I just didn't understand these things because everything was so new to me. And so that was really the problem, is that right here, the market would be getting oversold, or whatever ticker I was looking at. Maybe I was looking at the 15-minute time frame or the hourly time frame. You get oversold, and it would come up like this, and I'd be making money. And then it would run right into an overhead moving average, maybe something like the hourly 200, if I was looking at the hourly chart. And we know that 200 is resistance, and it would come right back over, and I get stopped out. And it just it frustrated me so much that I finally had, I don't know what finally made me figure this out, but I kept stepping back and looking at things and observing this. Because remember, guys, I'm a mechanical engineer. I went to school for mechanical engineering. I worked for Raytheon. I worked for a couple of machine shops in Tucson when I was going to school at U of A and Pima. And then I have a degree in welding. I fly. I like working on cars. I have a 77 Camaro. I do race cars, stuff like that. So that's just how my brain works. I got to figure this thing out. And I knew that there were answers to the stock market. Like the people make money. There's got to be a way. There got to be some answers. And so I just started looking at this and figuring stuff out. And I realized like, oh, I'm running into these overhead moving averages. And now I finally learned what the difference was between one time frame and another time frame. And that's how I really kind of came up with this flow chart. It told me, it gave me a checklist to figure out that no, these are the parameters that I need in order for price to go up in an actual trend, not just a bounce in a downtrend. And now that I'm better, now that over 10 years have passed, because I've been doing this for like 20 plus. And so now that I've kind of figured all this stuff out, now I know when those things are. And then, for example, let's see if I can show you, now I can actually take these into my advantage. So like, for example, right here, if you look at this is what I used to be really good and bad at. I was really good at, say, buying right there because, hey, look, price is going up. And I'd get that. I'd get that move. But then it would roll over and I'd lose money. That's exactly the kind of trade that I'd be bad at. Now I know how to get in here and I know to sell here. And now I can make money right there. And that's exactly the trade we did. So really, there is something to be said about time in the game, experience, but also we can convey these experiences to you because we've been doing this for so long. We've come up with this process. We come up with a methodology. We've come up with these rules and we come up with an indicator and I can actually spell it out. I can actually write it down. I can put it in a checklist. I can make a pamphlet out of it and I can give you guys these rules so you don't have to learn them from scratch the way that I did. Just like Bill was saying, yeah, the checklist on when to enter a trade is a great learning tool. I mean, that's exactly it. And even if we come back to, let's see, which one was it? I think it was, sorry, I have so many things up here. Now it's one of these. I'm trying to figure out where I put it. But yeah, it was basically being able to put this thing out here and actually have this checklist that really helped me figure out what to do about all these things. And now I can convey them. I can actually put them in words. And that's really kind of the big thing about it. All right. So let me know if you guys have any particular questions. Let me kind of make sure. Yeah, Phyllis. So you have the Moxy indicator. This is on stock charts. So if you want to get it on stock charts, just reach out to stock charts. It should be in their store, basically. And then you can pick it up from them. And let's see, I'm making sure anybody has any questions. Because yeah, I'm here for you guys today. Let me know if there's anything that you guys have, before the class. And if you have any last minute questions. Oh, Sonny, yeah, good to see you. Have a great weekend. If you guys have any questions, even anybody out there on YouTube, Facebook, or X, maybe you're kind of on the fence, wondering about this class, let me know. This is here. We're here to answer your questions and help you out. Let's see. How does the Moxy indicator help you differentiate between a true momentum shift and a fake out in swing trading? That kind of sounds like what I would call an inverse trampoline move. So again, I'm going to kind of dive into the class, but basically the Moxy indicator can help you stay safe. In fact, I think Palantir was a pretty good one. Yeah. So this is what I call an inverse trampoline move. And this is one of the things that I really, really like to drive home, especially in the class, is when you have price over the 50 and the Moxy indicator is below 0, that's an inverse trampoline move. That's how you know that this is going to be a bounce and a downtrend, and that this move up is most likely going to be a fake out. Okay, so that's some of the things that we look at. The Moxy indicator is a momentum-based indicator. And so really what you're looking at is the indicator above 0? Positive, great, momentum's up, so you can generally rely on the trend being up. Or is the momentum down, negative, below 0, and therefore any kind of bounce is going to be going against momentum, and it's probably going to be short-lived, and you shouldn't trust it. That's really the key. That's the difference between a like a dip in an uptrend and a bounce at a downtrend. Steven, did I trade the last 30 minutes of the day? No, I was actually eating lunch. Yeah, there were plenty of opportunities for today. If you wanted to do any call credit spreads, I've done 3 for 3 this week, so I was feeling pretty good. We also just cashed in a 22% gain on just stock using GDXD because we shorted GDX basically. And then because I knew I was going to have this thing to right after the market, and because we are having guests over tonight, I got to clean the house. That was my opportunity to eat lunch. But Danielle was on, and she was talking to you guys through the whole last hour of the market. Let's see, David, can I talk about SPX? Can I talk about SPX, any trends, or is it too early? Well, the trend is down. Not to be silly, but the trend is down. That is exactly the trend. So we are now, what are we, like 17 or 18% down? Yeah, about 17, a little over, yeah, about 17-ish percent. You know, we might go to 20. We might get 20 before we see anything, because that would also equal a gap down. And what would that take us to? Like 5,000, sub 5,000. So yeah, sub 5,000 to get it 20%. It's certainly possible. With the way that the market ended today, I would lean towards there probably being a bit of a gap down on Monday. And then I want to see if we can actually get a little bit of a turnaround. Maybe not turnaround Tuesday. It might actually be margin call Monday, and then we kind of turn, kind of like what we did this week. If you guys remember, we had a gap down on Monday, and then we rallied for 3 days. The only way that I think that would shift, like if we didn't gap down on Monday, is if there was some sort of news that came out over the weekend that somehow changed the course of what was happening. Okay, so yeah. Stevens, let's see. You watched the 5150 call go from 2.5 to 18. Then a 5100 put traveled to 30 from $2. Wow. Yeah, that is why I want to show you guys the 0DT stuff. Let me see if I can even pull that up so that I can see what you're looking at. Can I look at that for training? Yeah. Yeah. In fact, I'll make a note of that also. Let's see, 5150 call. I have this, I already have the call side pulled up. I think it's this one right here. And let's see what we look at. 5150 call, and went from 2. Wow, gosh, look at the range on this thing. What a day. Look at the range. I mean, this is pretty crazy. This call, it was at $100 at one point today. That's how much premium is in this thing. So let's see, 2 to 18. Yeah, right here. So that was kind of towards the end of the day. There was a small setup. This isn't exactly what I'd be looking for. Let's see, 250 here up to, well, it went to 18. Yeah, 575%. Okay, so there is a move. There are some things I can point out, but this still is not exactly the kind of trade that I would be teaching you guys. There are moves, of course. There are moves every day, every minute. But the whole point is to be able to catch the ones that we can consistently find and rely on. That's really the key. And this one isn't really that. This is more like a glamorous oversold bounce or a reversion to the mean. So as I said, there are things that I can point out, and I can point these out in the class, but this is not a true setup that I would be using. You know, even back here, there's a little bit of a setup here. You know, this one is a little bit more right there, but same. These are just bounces and downtrends. So they're possible, but they're really challenging because you're really trying to work against what the market's trying to do. Let me kind of flip this upside down, and let's take a look at the puts for a second and see if there's a little bit more. Yeah, and Stephen, the other thing is when you get closer and closer to the end of the day, smaller movements can have more effect on the options because they're about to expire. And so there's very little premium in them. And if the market moves into that strike or gets to it, they suddenly explode. So yes, the end of the day can be pretty darn wild as far as the 0DT stuff. You just have to be, I mean, it has to happen first off. And Well, basically it has to happen. And so planning on it can be a little bit challenging. Obviously, on a day like today, where the premium is so jacked up and you got a lot of movement. I mean, look at that thing. That call was $100 to start, and it all went to zero by the end of the day. Let's see, you're looking at the 5100 put. Let's take a look at that thing. Yeah, yeah. Look, pretty wild, right? So this is the other thing. This is why kind of knowing what's going on with the market as far as you got your volatility, you got your premiums. Yes, there were some really big moves. Okay. But here's the challenging part. Even though the market was going down all day long, and this is the thing we're going to be teaching, this is what you got to understand. Even though it was going down all day long, you're working against theta decay. Okay. So even though, where did the market even start today? And yes, Mark over on Facebook, yes, everything is going to be live. So I'm going to be teaching the class live, but it's all recorded too. So I'll be right there. You guys are going to be in the class. I'm literally going to be on camera, just like you're seeing here, and you're going to be able to ask questions. And it's going to be right as if we were in a virtual classroom with me here, drinking my tea, making sure my voice does well for 4 hours. All right. So yeah, 5,100. Okay. The market opened at 5,300. Let's just say 5,300, and did end up going to 5,100. So why didn't the 5,100 put really make any money? I mean, you look at basically where it started to where it closed, and it made, okay, 180%. But like, why didn't it make 1,000%? This market went straight down. It's because, first of all, a lot of premium are in these. Like the VIX is jacked. Okay. There's a lot of premium in here. And remember, all of these things are a melting ice cream cone. So over the course of time, since these are 0 DTE, you are working against a melting ice cream cone. And when you are already padded with a ton of VIX and implied volatility, you're working against yourself. And so the market also just didn't go down fast enough to really make this thing appreciate in value. Every time the market went down, yes, the value went up, but then the market went sideways and all that IV started to come out of it. And then the market took another little leg. Yeah, it went down, but then the market bounced. And now you're getting closer and closer to zero, to where these things are going to expire to zero if it doesn't actually end up in the money. That's what you're working against, is that these things are all melting to zero. And that's why something like this didn't exactly work. So sometimes in certain environments like this, selling credit spreads is actually going to be easier. Like I would have much rather have sold call credit spreads, and instead of trying to catch that rare 500% up move that was really just a bounce at a downtrend, I rather actually find the high of that, sell that, and make probably an easier 90%. Okay, I'd rather make a very easy 90% than a very hard 500%. And that's what we needed to figure out in these situations like this. So that's why this didn't really do much, because it took all day in order for price to even get to 5,100. And that ice cream cone just kept melting on you. Yeah, and Stephen, so yeah, I mean the signals are great and everything, but again, when you're dealing with the 0 DT, you're working. This is why options are a little bit tricky, is that you're working against some stuff, and that's why you have to pick the correct strategy. And that's why, if the market's down, great, you can go directional, but you don't want to pick too far out of the money, because if it goes too slowly, it's just, you're going to be going neutral exactly like this. And I got some parameters to help show you guys for that, but also in a day like today, if it's going to be just a slow meltdown, sell calls on your way down. Or if it's going to be an up day, sell puts on the way up. And those are going to be easy kind of things. Yeah, and this is a 2-minute chart. I mean, actually, I guess at 5-minute, it should be 2. 2-minute chart, same kind of deal. It's a little bit more nuanced. You can see it a little bit better. You can see the turns, but same thing, man. You better be quick on some of these things. That's why selling premium could be a little bit easier on these. All right, let's see. With possible margin calls, would the market behave like 1987? I don't think so. 1987 was more of a how do we call it, intrinsic, or there was more of a structural problem. In 1987, it's when they had all of those, I'm forgetting the exact phrases, but they invented a new type of financial product. And what happened was, everyone was promising like, oh, it won't break down because if it goes below a certain amount, you get out or you buy more or something like that. And what it did, they didn't predict, or they didn't think that a catastrophe was going to happen, that when you sell so much of this one product, that when it actually starts going down and it starts triggering these things, it then became a snowball effect. So that's what 1987 was a culmination of a new financial tool, or product rather, that created a giant snowball effect because they had actually sold too much of it. They had too much of that product was in the market. And when it then started having problems, it was one thing on top of another. It was kind of, you could almost liken it to 2008, when we had all of the, again, I'm brain farting here because I'm trying to think about all these other things, but the credit default swaps. So in 2008, credit default swaps, it just created a giant snowball for one thing after another to go down, that when everybody was basically gearing these products for the market to go up and not down, that when the market started to go down, they all started to blow up, and then they took each other down one after one after one after one. So no, I think we don't really have a structural problem as far as any financial products. What we're seeing right now is, well, a change of trade policy. We're seeing an administration that's coming in here that have different ideas, different policies, and they're shaking things up. And that's what's happening. So this isn't more about Wall Street, who got things wrong with their structures. This is about everything getting renegotiated, and the market does not know what to think about that. All right, Pat. Yeah, you're new to my trading. Great, welcome. Can you summarize how you can use your indicators/system for longer term investing and possibly swing trades? Yeah, absolutely. So my system is especially swing trading. Like that is where I have been swing trading since the beginning. I've only recently switched over to day trading because, well, we went through to the 2022 bear market, and even though we came out of the bear market, all the small caps, which is what I love to trade, were in hibernation mode. They were doing nothing. And so I was like, okay, well, I'm not going to be making enough money just buying Apple stock. That's not going to, I'm not going to earn a living that way. I need to learn how to do something else. And so that's where I said, okay, 0DT day trading. And so I hopped over to there, and that actually worked out really well because the Moxy indicator works really well for day trading. And I didn't know this, but the Moxy indicator works really well on options. Didn't know that either until I learned that you could actually visualize options. So it was kind of this amazing thing that I discovered about my own tool that I didn't even know. So that's kind of cool. But yes, swing trading is my bread and butter. And let me see if I can have a Palantir, or heck, let's do some of the trades that we did. So Pat, if you want to go back and look at any of our marketing material, honestly, I have one that I put out Sunday. What day was Sunday? On the 30th. If you go look at my YouTube channel, Profit Pilot on YouTube, go look at the thing I posted on the 30th, maybe the 31st, around there. It was how I made 156% in 5 months. It actually showcases a lot of the trades that we took, which were swing trades. So again, my bread and butter is swing trading. And you can see here, Mike, this is HNST. This is one of our earlier trades that totally took off and did amazingly well. This is the whole point. You see how price is coming down? You see how the Moxy indicator is coming up? That's your divergence. That is the Moxy indicator as a momentum-based tool that is telling you that the momentum is starting to shift. So, hey, you can be short, right? Because you did actually get a short entry. Let's just say you want to be short. There's your short entry. And then it follows the rules to go down. Great. But at some point, you need to start looking at this, because if you're short, you need to start looking at this and be like, price keeps going down, but the Moxy indicator keeps going up. What's going on? It means internally pressure is starting to build to the long side. You might want to start taking your profits or exiting your shorts, okay? And then what happens? Moxy price trigger. Moxy indicator now just went positive. That means you are now positive, okay? Momentum's positive. And that's where we first went in. And then you buy the dip because of what I call the trampoline move. And then now you move up like this. And you can see we continued to follow to the upside. I mean, this setup to the upside is exactly the same setup as to the downside. It's exactly the same thing. This is why the principles work, because I can teach you long, I can teach you short, I I can teach you day trading, because all these things do the same thing on all the time frames. You're just fractal. And then you can see from there, pretty good trade. It was also a good market. We got in here, and our first exit was 103%, and our final exit was 142%. And then you can see just shortly after, there's your Moxy price trigger to the downside. So that was the really crazy thing, that when I started tinkering around with the Moxy indicator and working on this thing, I realized that when you have good trends, look at the Moxy indicator and how it catches like 90% of the trend. That is fantastic. And I don't even make that up. I mean, you see this stuff just over and over and over again. So yeah, that's swing trading. If you want to do longer term trading, then you just keep backing out. You just start coming out here and you go on higher time frames. And so for something like HNST, and again, I have these rules as we're going to go over in the class, but there's your Moxy price trigger. That's just your heads up. That is not actually your entry. It's just a heads up. And then you can see here, that's where it finally started to get over moving averages. And then look at that. Now it's engaging with those moving averages. That's exactly the same setup as HNST on the hourly chart. So it's just fractal. It's the same stuff. If you want to be a longer term trader, great. You just zoom out. You just zoom out to the monthly, the weekly, the daily. If you want to be a day trader, great. You're on the 15, the 5, and the 2. And if you're a swing trader, daily, hourly, 15. And if you're like me, you look at all of them so that you can read the entire story of what the market's doing. You read the entire book. And that's the whole point. Because I like to know the context. That is why when we were in this HNST trade, I knew to get out here. Because of everything I teach, all the principles, all the stuff that I'm going to include in the study guide, all the stuff that's in the classroom, all the stuff that I show you, this is all step-by-step stuff that when you're done with it, we're going to be speaking the same language and you'll have the same knowledge that I do. And then you can apply them in the same way, whether it's on a weekly chart or an hourly chart, doesn't matter. Yeah, and even gold. Gold was a great, okay, so many people have been talking about gold. How about this? There's your Moxy price trigger. Like, how about that? How's that for timing? There's the Moxy indicator for you, and then you can see right there started to engage. It's the same setup as HNST on the weekly. It's the same setup as HNST on the hourly. It's the same setup. And then we shorted GDX because I could point out that GLD was too high. Again, all the same stuff that we look for. And in fact, let me show you the GDX trade. So we shorted GDX. Actually, I'll show you this. We did 2 trades. We got long GDX right there. We exited GDX right there, GDXU for 29%. So we made 29% on a swing trade. And then I figured like, well, if I'm out of my long, and I think this market might pull back, and I think gold specifically might pull back, then maybe I should actually short it. And this actually played out way better than I could have ever hoped, because we got paid in one day. But look at here we go. Here's our Moxy price trigger right there. Now it fired today, not yesterday, but because we could see what was happening, we could see the divergence. Like you could see here's price up, here's the Moxy indicator down. Yesterday, almost fired yesterday. So I have enough experience. I can convey this to you guys and show you, like, you'll see this, you'll see the divergence coming, and you'll see the parameters on the weekly chart that say, hey, this is probably going to pull back. And then you just take advantage of it. And that was a 22% trade basically overnight, because we bought GDXD yesterday. And as part of the Elite and the Pro, since I'm going to be doing that ETF class, there are specific reasons that also helped me decide to get into this because of the GDXD, because of the leveraged ETF. The leveraged ETFs, and I know this sounds kind of crazy because I've even asked other professional traders around me, I was like, hey, am I seeing this on these things? And I actually got a little poo-pooed. People who I was asking, like, is this the thing? Like looking at these leverage ETFs? I mean, and they all kind of thought like, no, real money doesn't go into these leverage ETFs. And, it's kind of just for retail, or, there's not a lot of money in there. And I was like, I don't know. In my experience, there actually is. I think that there's a lot of money in leverage ETFs. And I think that probably hedge funds or other institutions, maybe family offices, I think they use leveraged ETFs, which now that I'm speaking about this, it probably actually proves the point. This is why we have Tesla leveraged ETF. This is why we have Apple leveraged ETF, Amazon, Google, NVIDIA. These are all single stock leveraged ETFs. So clearly there is a demand for them. And I think I was actually kind of one of the, I don't know, the early people around here who, as a stock trading person, I needed to go find leverage in stocks. And so I would trade SOXL. I trade Nugget, if you guys remember, basically Nugget and Dust, the leverage ETFs for GDX, Gush and Drip for energy, oil. I know all of the leverage ETFs. And I just discovered that there are footprints in certain activities that you can see in them that you wouldn't see in the normal ETF or the stock. And they showed me things that just weren't communicated elsewhere. It was really pretty cool, especially during COVID. And that was another reason why I got into GDXD yesterday. Yeah, Sean. So yeah, I know we got a lot of Canadians asking questions about what platform, because I know Thinkorswim isn't over there. So yeah, stock charts and TradingView. Unless maybe you can you open an account, like a brokerage account in the US, and then you can Thinkorswim. Or we've even had people, and I don't know this if this applies. Yeah, Lauren, not allowed. I figured. I've had other people where you can open up a demo account, and again, maybe this is old, maybe they've changed it since Schwab took over, but I know that people could open a demo account, even being in Canada or somewhere else in the world, and they would use the demo account to be able to look at charts and the Moxy indicator, and then they would just go execute on a different platform or wherever their cash is. So sometimes there are some workarounds. Yeah, cool, Pat. Yeah, go look at that video on Sunday and you'll see all the examples and all the big movers that we traded in order to, I said, I grew that $25,000 account 156%, got it up to 64,000 before the market tapped out. And now we're just day trading. And here's the other thing, like we went to cash, like, the market made new all-time highs and then 2 days later it rolled over and we went to cash. Great. That was a great play. Great decision. Go to cash. Let's see. Do you primarily use Moxy on a specific time frame, or do you combine multiple time frames for confirmation before entering a trade? I use multiple. Now I have primaries, but I use all of them. So my bread and butter as far as swing trading goes is the daily and the hourly, and then I'll use the 15-minute time frame to really finesse my entry, to really figure out the exact moment that this is going to turn around. But daily and hourly primarily for swing trading. But I use all of the time frames because I need to know what the bigger picture is telling me. So I need to know the context. This is again how I prevent myself from buying a dip in a downtrend, or buying a bounce in a downtrend. I use the monthly and weekly just so I can understand where is price in general, and then I go down to the daily, hourly, and 15 for swing trading. If I'm going to be day trading, then I use the 15, the 5, and the 2. But of course, I know what's going on the hourly and the daily, because sometimes, if price comes up to the daily 50 and then price turns around, you might be looking at the 5-minute and be like, why did it turn around? And it's like, oh, because it hit the daily 50. So in my world, I think you need to kind of be able to see everything like that. I'm trying to think that there was, I'm trying to think what example I was thinking of where if you only looked at the daily chart, you were missing something. And then it showed up on the hourly, or maybe it was vice versa. Like if you're looking at the hourly chart, you totally missed something because it showed up on the daily. So I like to have multiple timeframes because I do find them to be very important. Steven, so yeah, the class tomorrow is going to be, let me get this right. It's going to be 10 a.m. Pacific, since I'm on the West Coast, which is 12 noon Central, which would be 1 o'clock East Coast. Hopefully I did all the math correctly there. It's recorded. It's going to be live, but it's going to be recorded. And so you should get everything probably later that evening because, our team works even over on the weekend when we do things like this. And then, you'll have all the material. So go through it. dive into it. And then if you guys, for the class purchase, let me actually make sure I have this up here for you. So when you're in here, if you pick up some of the bigger packages here, which again, highly recommend, because we were doing the math. I was doing the math on this one, like Elite, it's an annual membership. It's $5 a day. And if you have the Moxy indicator already, it's even less. And you're going to be getting 3 classes. So it's not like, okay, this is one class, it's $5 a day. You're getting 3 classes. And it's going to be $5 a day. And you might even get some discounts. I don't know what else. Everyone's got different levels and specials and stuff like that. But basically, it comes out to $5 a day. So pretty easy. And we're going to be talking about the day trading, ETF trading, and then just the whole OG Moxy indicator stuff. And remember, we're going to be teaching tomorrow. So we're going to be there about 4 hours. If people are loving this and you guys got a lot of questions, I'm happy to go longer. Oh, hang on. My wife is cooking and baking and stuff, getting ready. Again, it's my job to vacuum today, so I got to get out there and do housework today. But yeah, tomorrow, noon Central, we're going to start. I'm planning for about 4 hours. There's more information that I've created than I can even go over in 4 hours. But the whole point is I'm going to be able to touch on all the subjects with the Moxy indicator and principles that I use. But I've made more examples so that you guys can have them for reference and take them home. Okay. So this isn't just like a skim through thing. It's like, no, I got a lot of stuff here for you. And then on Tuesday, the 8th, we're going to be doing the 0 DT class. And that one I have added some stuff too. So that one, since that was a new class for me, I've had longer time with it. I've added a couple features there to make sure that everyone's up to speed with what I've learned. And then on the 16th, and actually that one is that evening. And same thing, this is all after the market closes. And then on the 16th, we're going to do the ETF breakout session as well. And then, Stephen, the classroom is a specific classroom. It's not going to be the Moxy room. So the Moxy room is for the trading room only. Classroom is a classroom. So there's a special link for that. You go into your simpler website or simpler login, and it'll be where classes are. And then that's how you log into your class. All right, let's see. And then there's my pretty face all over the place. And yeah, so I think that's pretty much up here. Let me know if you guys have any other questions. I see a few more that I can get to. Do you use the Moxy on indexes as a top-down approach to help you gauge sentiment? Absolutely. Absolutely. Yep. Yeah, because we got to know what the overall market is doing. In fact, let me show you something that I was discussing today with the IWM on the monthly chart. I got to change my things here. This is something that my old mentor, Sue, you guys probably hear me discuss her name every once in a while. She called these, and I know everybody's got different names for them, railroads or inside candles or whatever. The name that always stuck with me, because it's kind of funny and cute, she called them Los Dos Amigos. So when you have 2 candle bars that are of equal size and they're opposite of each other, that means basically rejection or support if it's up, but in this case, rejection, and you go with the candle of the latest direction. So we had a giant candle to the upside and an equally candle back to the downside. You go that direction. And that was something I saw, basically the Trump bump and everything. And I was like, this is not fun. That should not have turned tail as quickly. We should have had a good bump like that, and it should have stayed. And then when it came back down and then it continued to falter, I'm like, well, that just proved itself. So yeah, it's one of those things that I've been looking at. And what that reminded me of, if you guys have been trading, I don't know if I know we got a lot of new people in here, and so I don't know how many people were actually trading in 2020 and all that. For those of you who are around, do you guys remember right here? Let's see, about November 2021. This was the day that the IWM finally rolled over. Yeah, SP. Yeah, we were talking about that this morning. If you guys remember, and you can see this on the weekly chart a little bit better, what we were looking at was price flagging into an uptrending 50. And we're like, is it bullish? Maybe this is just a bull flag. And then we shot up like this and immediately rolled over, and that was the end of the market. I could talk about trickery, right? This is the challenge. This is the thing about the market that, sometimes you got to have some experience or have people like us coach you through these things. Is that, yeah, the market like this likes to fake people out. It goes up there. It was a bull trap. It lured a bunch of bulls in there being like, oh, this is great, only to completely flip around, get stuck underneath the moving average, have the Moxy price trigger fire to the downside, and that was the bear market. Don't you just love how they like to sucker people in with a brand new breakout only to completely get rejected and turn around? And so that's some of the stuff that we'll talk about in the class. Make sure you guys understand these things and teach about them. That's what we saw a month ago when the S&P made a brand new all-time high and then completely turned around. And that was the end of the market. All right, let me get this back. So yeah, that's why it's important to know what the indexes are doing. Absolutely. So that was the whole point of that thing. Yeah, SB. One thing I like to do, make sure if you have Thinkorswim, make sure you understand how to use the on-demand feature. I continue to use it. Okay. There was even a couple moves over the last week or so, or 3 weeks or so, where I wanted to relive it. Be like, how did that work? And especially with options, I wanted to go back and be like, how did those 0 DTs work? And so using the on-demand feature, basically the DVR for the stock market, you use that. You can go back and you can actually just re-experience these things, this stuff as the market. And that was really key. That was so impactful to my trading career because I could look at stock. Like if I come over here and whatever action it is, I could go back and I could compress all of this amount of action, like 9 months of action. I can compress that into maybe an hour to an hour and a half worth of experience. And do you know how valuable that is? Because in 9 months, think about how many different thoughts you have throughout the course of the day. You got to take care of your family. You got to take care of jobs. You got to take care of your stock positions. You got to take care of your car insurance. You got to take care of the house. You got to take care of the dog, like all these things. And so every little point of education that's happening with the market happens infrequently, spread out, and with a lot of other mumbo jumbo in the way. And if you use the on-demand feature, you can compress all of that learning, 9 months of experience, into an hour and a half. You're going to learn a lot faster because the connection from the one experience to the other experience, which has the teaching moment, will all be within an hour and a half, and you won't have any distractions. You can tell the dog to go away for a while. You can tell the kids you're busy, and you can learn that much inside of an hour and a half. And now your neurons and your synapses will connect, and now you've actually learned something. It was one of the biggest things that helped me figure out how to trade the market, was using the on-demand feature, because I could compress the timeline it took me to learn. I didn't have to sit at my desk and learn one day at a time. I could learn 9 months at a time in a few hours. I cannot stress how important that is. So even I still use it at this time. Yeah, Mason. Yeah, the Moxy indicator is on TradingView. Yep. All right. Let me know. I've been here about an hour. Wow, time flies when you're on a soapbox, right? Let me know. You guys are here. You're still listening. Especially, I see a bunch. Actually, I see a ton of eyeballs over on Facebook, YouTube, X. I'm not sure which platform everybody's on, but I'm seeing a ton of eyeballs here. If you've been watching this long, you've been here with me for an hour. Let me know what kind of questions you have. What would get you over the fence or the hurdle? What would it take to get you guys into the class tomorrow so that it can help you out? Because I know the market's been treacherous like this. It's been challenging, but we've been doing well. Okay. We shorted GDX. We made 22% overnight from yesterday to today. I've put on 3-day trades this week. SPX, they all worked. We knew when to get out of the market. We took Tesla on the way up. In fact, we did TSLL. Right here. We got into Tesla right here. We sold half here, and we sold the other half here. And that was 37%. Yeah, 37, 38% right there. And then right here, 30%. Even in a down market like this, there were some ups. Yeah, Tesla was well timed, both on the upside and for getting out. Now, if I really wanted to, we could have shorted it as well. But, I figured, hey, I shorted GDX. We got 22% overnight. Fantastic. So, really, I'm here for you guys. I want to answer questions. If you're kind of like, oh, I don't know, let me know. Let me know what your thoughts are. And I guess if I don't have any questions, that means I'm going to be seeing a lot of you tomorrow, which is fantastic. The room has been filling up. We've been seeing great success with that. So yeah, pretty thrilled to see. The team is kind of waiting by, making sure that you guys get dialed in. We always know when we do classes like this, people are going to have a lot of questions. So we make sure there are plenty of people around. Mason, I think you need to order it through us. I think in order to buy Moxy on TradingView, you have to get it from Simpler. I'm not on that side of the business, so I think that's the case, because we have to give you the activation code and all that. All right, and then yeah, so for anybody else out there wondering, again, all those eyeballs out there on social medias, this market is all over the place, but again, we know how to navigate it. We've been navigating it. We've been doing well with this. GDX, talk about a 1-day trade. That was pretty great. I mean, we shorted that thing yesterday. Boom. So it's certainly possible, even in a market like this. And if you're kind of like, well, I don't really want to trade through this market, great. Let's learn. Let's take this time. Let's learn these principles, because we all know that this market will eventually come back. Because if you look at the S&P, remember, however long this market goes for, whether it's a year and a half bear market back in 21, 22, or if it's a 3-month pullback, this market will eventually come back. And when it does, look at the move that it had. Or even a 3-month pullback, look at the move that it had. And this is what you need to be ready for. This is why we always preach, any of us that are in the business, this is why we always preach that you gotta be learning. You want to know how to do this stuff, you got to learn in the off season. Yeah, okay, cool. That's what it sounds like. Yeah, Mason. So you need to purchase it from us, get the code, and then once you have the access code, then you'll see it on your TradingView account. Stock charts, on the other hand, I think you can actually just go to stock charts, and I think it's in their store. I can't confirm that 100%, but I think that's how that works. I know every platform, every company is a little bit different. Okay. And sometimes these things kind of come out of the blue. Let's see, I can't go back far enough, but if you guys remember the SPX back here, when we had this 3-month pullback, the bottom of it was basically Halloween, right there, 30th, 31st. I was actually in Orlando, Florida for the money show. And everybody was miserable at that show. All the participants were like, oh my gosh, how long is this going to go down? Like, what's going on? We've been down, down, down. I don't know when this thing's going to turn around. And I was one of the few presenters out there. I said, I actually think this thing is about ready to turn. I have my indications. I got my clues. I got all the things that I'm going to be teaching you guys and show you guys why I thought that was a thing. And sure enough, came back. I actually was there for Halloween because I had to miss a couple parties. And then the market flipped around and just went, and we loaded up. So, if we're in a situation like we are now, when the market's coming down, or even back here in whatever year this was, 2023, October, you need to be ready. You need to know how to do these things. You need to learn. You need to be ready to go so that when the market does fire, you're ready to hit the ground running. And that's why we trade, we talk, we teach, even during times like this, because we're good enough. We know how to navigate it. And then we convey that to you. Okay. All right. Well, as I said, I think I've got enough from my soapbox up here. I hope you guys have been joining the time. I still see a bunch of eyeballs, actually more eyeballs. Okay, more people tuning in. Well, I can't be here all day. As I said, I got a party that I have to get ready for, dinner party. So I got to go do some vacuuming and some cleaning. And really, for the rest of you, let me know if you guys have any questions. We'll be here tomorrow. We'll be live. It's going to be recorded. Happy to answer any questions as it comes along. I'll be sipping my tea to make sure my throat stays good. And then beyond that, we're going to be having a pretty good time tomorrow showing you guys this stuff. I love doing it. I've been doing this for years. You know, it's like John Carter. We love giving back. We love showing you guys what's going on, how to do this, and empowering you, making sure that you guys know how to do this and how to take charge of the market. Okay. So thanks again, guys. And yeah, SP, looking forward to seeing you guys there. And Mason, I'll see you there tomorrow too. And for the rest of the team, Mirza, Amir, Lorna, and I don't know, anybody else who's going to be behind the scenes with me tomorrow. Thank you. Thanks for working on a weekend. I'll see you there. Take care.